I'm John Hanna for CDTV.net here in New York City, and we have Mike Scanlon joining us from Los Altos, California. Thanks for joining us, sir.
Sure, John. Thanks for having me.
Um, well, first of all, let's try to get a little bit of a background about you.
Okay. My main investment strategy is covered calls, and I have been trading covered calls for 30 years. My father is a stockbroker, and he taught me as a teenager that selling options was a much better deal than buying options, since most of them expire worthless, at least the ones that are held to expiration. And so I was been trading calls my entire career, although I've only been doing it full time for the last 3 years. Previously, I was a venture capitalist. I worked at two different billion-dollar venture funds when we invested in high-tech startups. Before that, I was an investment banker, and I got my Series 7, 63, and 24 securities licenses. And before that, I spent 10 years as a software engineer for the losses.
Okay. Now let's talk about from venture capital to what you're doing now with your website, borntosell.com. How did that jump happen?
Sure. So I had been a VC for 6 years, and I had invested in many different startups and enabled many different entrepreneurs to follow their dreams. And I was kind of getting antsy that I wanted to follow my dream because I'm very passionate about covered calls. So I quit the venture business, which a lot of people questioned that decision because it was a very good business to be in, and started Born to Sell about 3 years ago. And we had many offers to receive funding from angel investors and some VCs because they know me and they trust that I was going to build a valuable enterprise. We decided not to take venture funding and instead do self-funding. So the entire company is funded by the founders. And we spent a year and a half building the company. We hired 35 people across the world, actually. We had developers in Romania and Russia. We had design people in Texas and Argentina. We had quality assurance testers in India and some in China, the Ukraine. Basically, people all over the world who met them online. I didn't know them before. We launched the service about a year and a half ago, and it's been great since then. Barron's has written about us twice and had very nice things to say. We've grown our subscribers every month for 19 months in a row. And really, it's a chance for me to do what I love doing, which is talk about covered calls all day long, design new features, talk to customers, do trading for my own personal account, and really just follow my dream. You know, they say if you do what you love, you'll never work a day in your life, and that's what it feels like for me.
Nice, nice. That's what everybody wants to have. It's like
Yeah,
love what you do, right?
exactly.
And it doesn't feel like work.
You know, the other thing is, well, I was frustrated when I was a covered call investor, as when I had my day job. Over a 20-year period, there were really no good tools to help covered call investors, and it's what I wanted to do all the time. I'm very technical. I'm a programmer, so I had an Excel spreadsheet that tracked all my positions and attempted to do some screening, but it didn't import things like ex-dividend dates. It didn't import the next earnings release date. So I have to like first do all my research, and then as a secondary process, go look up the ex-dividend date and the earnings date to see if it occurred before the option expiration. And that whole process was really time consuming. So basically, I built a tool that I wanted to use as to help me with my covered call trading, thinking that it would help other covered call investors as well.
Okay, so what happens now? So you have a typical web surfer finds stumbles into your website. They register for whatever the monthly registration price that you have, and then what happens? Do they get like the software downloaded to their account, or do they use the software on your site? Kind of like a cloud-based software.
Yeah, it's cloud-based. So it's a browser-based product, so you can access it from any web browser or your iPad or your iPhone. Anything that has a browser, you can use the product. And yes, there's a registration process. It's free to sign up. There's a 2-week free trial. You get everything we have for no charge. If you don't like it, you cancel. There's no charge. The monthly fee is $60 a month, and we give discounts if you sign up for quarterly or annual. If you do the annual, it's like $41 a month. And there's no software to download. We update it continuously, and every user gets all the updates instantly because it's cloud-based.
Okay, so let's do a typical, let's say for example, search. Um, so
Okay.
give us a rundown of what kind of search would a user do.
Sure. So we have two levels. We have the basic search and the advanced search. And at the very beginning, you would enter your time horizon, which would be the expiration date that you wanted to look for options within. So most people who are selling covered calls frequently will do the near month. So today's February 10th. You could look at the February 18th expiration, which would only be about an 8-day trade. And then all the results that you see will be locked into the February 18th expiration, and you can change that expiration date. But once you set your time horizon, then you set your level of moneyness, which is if your options that you're selling will be in the money or out of the money. Most people have a bullishness or bearishness outlook sort of on a macro level. And so they'll say, well, we've been going up for 6 weeks. I think we're a little overbought. I'm going to sell some in the money options right now for the February expiration because I think we're due for a little pullback. So you'd set the moneyness filter to the minimum and maximum moneyness you're willing to look at. So you could do, between 5 and 15% in the money if you were really sort of bearish right now. And then the third high-level filter is stock price. Some people can't afford to buy 100 shares of Google because it's a $60,000 investment. So you can set the stock price to, as low as you'd like based on the sort of amount of money you'd like to put into a single position. After you set those three things, you get a list of results, and then you can make changes to those and fine-tune the results by layering on additional filters. So you can restrict the results by the PE multiple, the market cap, the minimum open interest in the option series, if there's an earnings before the expiration date that you set, if there's an ex-dividend date before the expiration date. You can limit the results to only the S&P 500 stocks if you don't want to deal with the small caps. If you only want to trade ETFs, because a lot of people like to do covered calls on ETFs, you can limit the results to only ETFs. You can remove specific sectors that you don't like, and so you feel like I don't want to do any financials right now. So you just check a box, and all the financials are removed from the list. And at the end of that process, you get a set of results that match just the filters that you've set, and you can then sort those results by any criteria that you like. The default sort is by the annualized return, assuming the stock is unchanged between today and expiration. But if you're not just chasing yield, if you want to be more conservative and you want to sort by downside protection, which is a combination of the moneyness plus the option for the time premium remaining in the option, you can sort the results by downside protection. And ultimately, the screener's purpose is to take the universe of 240,000 possible covered call opportunities, which is about how many there are at any given time, and reduce that set down to 10 or 20 that would be sort of ideas that at the beginning match the filters and the criteria that you've set up, but then each of those requires a little bit more due diligence on your part once they've been identified, because we don't make trade recommendations, we just are a screener and we show you things that match the criteria that you've asked for. And then you would go on and look up each of those companies, read the Yahoo Finance headlines or do some basic due diligence to understand, if you're not familiar with those companies, what's going on with those companies today, and do I want to own that stock in the event that it's not called away, on the February 18th expiration.
Okay. Any other things you might want to add about the Born to Sell website and other strategies that you can think of? Closing statements?
Well, there's a couple of other search modes, and I'll be real brief. We have one that's called Max Protection for people who are risk averse. The way it works is you set your annualized return goal. So if you want to make 18% a year, you set one of the sliders to 18%, and then it sorts all the results by downside protection. And everything on the list is going to pay at least 18% per year, but the ones at the top of the list are the ones that are the deepest in the money. And again, it's not a trade recommendation, but a great place to start doing research for ideas. And, like I said, we have a free trial, we have a free newsletter, we have a free blog, we have a free tutorial. So if you're interested in covered calls, it's a reasonable place to start looking around.
There you go. That's Mike Scanlon, the CEO of Born to Sell, with the borntosell.com website. And he's currently at Los Altos, California. And I'm John Hanna for CDTV.net in New York City.